Well, good morning, everyone. It's December 17th. It's a Tuesday, and we got two reports from the Fed today. Not major reports, but important reports. First is housing starts. It's coming out in about 40 minutes or so. I'm not expecting anything major with the housing starts. I'm expecting things to be quite in line with estimates. The consensus is between 1.293 and 1.394 million. The expectations is right in smack middle at 1.34. Prior was 1.314. Unless the number is really off one way or the other, and I don't think it's going to be. Usually the numbers are off in the beginning of summer when things quiet down, but right now we're reporting for the fall. So I don't really think the number is going to be anything out of the ordinary, if you will. Certainly not enough to mess with the market too much. Next thing, we have industrial production. Industrial production is very important because it makes up a good part of the GDP. Not a main part of the GDP, which is retail sales, but it does make a substantial portion of the GDP, enough to focus on. And it also tells us how the industrial sector is looking. Consensus is right on the higher end of the scale. The consensus range is 0.5, half to 1.1. I actually do believe we're going to reach the consensus, maybe even go a little higher. I don't think the numbers are going to be too far off. They were really off last time. They kind of tend to go back and forth. But again, anything between half, 0.5, and 1.1 is within line. So again, not expecting anything major there. Here's the problem that I'm seeing right now, and this has to do with the overall stock market structure at this time. It's kind of like a snapshot. If you look at the leading sectors, look at this. You got energy, utilities, healthcare. These are defensive sectors. Now, yesterday, the market came out, day before, market came out with positive data that China and US are going to work things out. But tech did not rise on it. It actually fell. It's already priced into the market. That's what the rally that you saw the last several weeks was all about. But now, again, we're seeing defensive. We're seeing energy, utilities, and healthcare lead. Those are defensive sectors. As a matter of fact, to give you a little confirmation of that, if you look, there we go. And if you look at my 10 major sectors, you will notice that technology is still leading, but look at consumer discretionary. It's lagging behind, and utilities is actually above. So you're seeing the same thing. You're seeing the same thing right here. You're seeing literally the same thing. You're seeing a fragmented market. You're not seeing a market moving in the same direction. Consumer discretionary should be moving in line with information technology and communication services. It's not. Consumer staples should be far away from consumer discretionary. That's telling me that stocks are overbought. Moreover, if you look at the Dow, and you'll see this with every index. You'll see this with the S&P. You'll see this with the Russell. And you'll see it with the Dow. Let me show you here. Let me show you something here. You see the trend line is moving higher, right? But look over here. That's divergence. That's classic divergence. And typically, when you're seeing divergence, when you're seeing the oscillator not pick up the momentum that the stocks are picking up, that's telling us that stocks are grossly overbought. And again, we're seeing it on the Russell. See the line right there? And we'll just draw it here. Just to give you, again, another visual. See, moving up, down. Let's look at the SPY. Same thing. Same thing. Again, I just want to show you what I'm talking about so you'll see it. It's on every index. Higher and lower. So that is classic divergence. And again, what's happening is the oscillator can't pick up the momentum levels that the stock market is picking up. It's saying it's too much. It's overbought, not just by price level, as we could see here, but by momentum levels. The momentum levels, price is higher, but momentum levels are lower. And as a matter of fact, let me show you something interesting. It coincides with my market momentum. Look at this. Two different, completely different indicators. Price still moving up, but percentage of stocks in the S&P 500. Sorry, this is consumer discretionary. I don't know how we got to consumer discretionary, but let me show you the overall market. S&P indices. There we go. Look at these levels. 77. That's crazy high. Look at this. Let me show you this. Wow. Whew. Look at that. What happens every time we go above the 75 level? Oh, this is the last 3 years. Let's go 5 years. All right, take a look at this chart, folks. Every time we break above 75 in the last 5 years, what happens? Market's overbought. The market is overbought right now. This is the time you want to stay out, pull back, or just get out for a little bit, maybe a few weeks, just to give stocks a little room to offset this imbalance that we're seeing, this divergence that we're seeing. It's not going to end well. It is going to put these sectors back in its place and cause a nice consolidation and cause stocks to go up. And I'm not really expecting a major downside, maybe just to the 50-day moving average, which would be really healthy for the market. So no, I'm not expecting anything crazy, but look at this. Let's look at 10 years. 10 years, we've got some higher momentum levels. We went up as high as 93, and then look at how far we crashed down. So again, the higher you go up, the higher you crash. But typically, if you look over the last 5 years, 5 years is a good enough time. 5 years, not 5 days, not 5 hours, not 5 years. Look at what happens every time we cross 75. We go south. And again, I'm not looking for anything crazy, just for the market to cool off so it can come back up. But we're definitely in the overbought level. So, folks, it's time to be careful. Again, I'm not expecting the market to crash. I'm not even expecting a major downside, just a minor cool off so that we can get back on track. Maybe even just a congestion period. Now, yesterday I talked about my 2020 blueprint, my 2020 wealth blueprint. I hope you guys saw the video. It was really cool. I unveiled it for you. I've got tons of people emailing me about it, asking me questions. I've been getting emails about our bundle ever since last year. So you'll get to access all of my research for life, all of my tools. You'll never miss a thing. If you've got any questions, we'll answer it for you. It's all included. But I got a lot of questions yesterday. A lot of, is it for life? What if we want to upgrade? What if we want to downgrade? What about next year? What about a lot of questions. So what I did was I put together a video giving you a highlight and answering all of these questions. Follow the link below. Check out my 2020 wealth blueprint. It's got everything you need to double your money next year. Not make 10%, not make 20%, not make 50%. It's designed to help you double your money in 2020 using the same techniques that I'm showing you day to day that have been working for well over 25 years, probably working for 25 years before I started trading. These are tactics that work when you combine the right strategy with the right system, which is what the wealth blueprint, the 2020 wealth blueprint is designed to help you with. It's literally like me taking you by the hand and saying, okay, the market's doing this, it's time to trade this strategy. All right, the market's doing this, it's time to take this strategy. We go through it every day in my boot camp. Everything's included. You really don't want to miss this out. Follow the link below. Check out the video. Learn everything you can about the 2020 Wealth Blueprint. Let me help you next year. You'll get access to this video right away. It'll teach you everything you need to know, answer all of your questions. Follow the link below. Don't miss out. Let's do this together in 2020. All right? Let's do it together, you and I. Let's do it. Why not? Do something to change your life in 2020. The Wealth Blueprint will help you achieve that goal. I'll talk to you guys soon. Take care and have a great day.